Happy Monday, ladies and gentlemen. Allincrypto here, and welcome back, guys, for another daily cryptocurrency market update. And if you are new around here, every single day at 1 p.m. we release an update just like this one. That is 1 p.m. UK time, helping you guys stay up to date with the latest and greatest things happening within the crypto space and also the markets. And that's exactly what we're going to be doing in this video. We will, of course, be diving into the Bitcoin chart. We actually are going to start things off with a clip of Janet Yellen talking about the transformative nature of crypto, digital assets, and the tokenization of everything. So crypto, despite everything going on in the macro and with markets, is on the cusp, the verge of changing the entire world through tokenization, through decentralization, and through a number of other avenues. You know, the entire financial system is getting revamped with distributed ledger technology. And the clip that we're going to play of Janet Yellen, it's a bit of an older clip, but it's one that most people missed, is her actually confirming this. And since this clip came out, you know, we have, and we continue to cover daily on this channel, got a lot of confirmation that the world is moving in that direction. So we're going to start things there. Then we'll move on to the Bitcoin chart. I want to actually talk a little bit about the Fed meeting last week, because it's thrown a lot of uncertainty to the dollar. Not the dollar, sorry, the markets. Generally, markets have been stalling a little bit since inflation started to pop its head up because it brings uncertainty into everything. The meeting put a little bit more uncertainty into that with no hike, which was a good result generally for the markets. But the forecast was higher for longer. And you've got this kind of pyramid, a kind of food scale, whatever you want to call it, pyramid that the markets adhere to. And you've got your debt markets right at the top, which acted pretty interestingly on the back end of the FOMC, Jerome Powell's speech, and the sort of forecast that came out of that. And then you've got things like real estate, which got hit really hard on the back end of Jerome Powell's speech. And these are very rate sensitive markets. So even though on the surface of it, it might have seemed like a lackluster speech and sort of forecast, the markets are adjusting and constantly adjusting. And actually, you can see the S&P is having a correction with these markets on the kind of notion that a higher for longer narrative is now very much on the cards, and there's uncertainty in the dollar with inflation spiking. All macro headwinds against Bitcoin, which is right at the bottom of that food chain, really where the plankton is. And then, of course, the stock market getting affected. You know, the dollar is a safety trade. Right now, you can get 5% on your money by just having it sat in cash. Why take that risk for the yield? So we'll be looking at that, looking at a couple of on-chain things and just talking about that generally. We had a great meeting yesterday with my patrons where we actually looked at Bitcoin and the stock market in relation to the money supply. You know, often stocks in terms of going up in value can be an illusion in regard to the actual purchasing power that they are now granting you in nominal monetary value. But let's not confuse everyone and put everyone to sleep right at the start of the video. We can get into that a little bit later on. Let's start things off with a clip from our favorite Janet Yellen talking about this industry and what it's doing.
And comprehensive government approach to digital asset policy. Digital assets have grown explosively, reaching a market cap of $3 trillion last November from $14 billion just 5 years prior. Digital assets may be relatively new, but they're part of a larger trend, the digitization of finance, that's been in the making for decades. In 1990, there were fewer than 3 million internet users, and now there are about 4.5 billion. And we take for granted that many aspects of our financial lives can be managed from small internet-connected devices that fit into the palms of our hands. This growth in digital services has opened up a world of possibilities and risks that would have seemed fantastical only a few decades ago. Financial services, along with most industries, have evolved in response to exponential advances in computing power and connectivity. Most recently, new technology has raised the possibility of reduced reliance on centralized intermediaries like banks and credit card companies. In 2008, a person or group of people using the pseudonym Satoshi Nakamoto proposed a decentralized peer-to-peer system for making and processing payments. A key challenge in digital payments is to prevent the same assets from being spent twice. The Bitcoin white paper proposed a novel method for validating transactions using cryptography that addressed the so-called double spend problem. This and other innovations related to distributed ledger technology are the foundation for blockchain-based digital assets.
Very interesting that you've got Janet Yellen talking about crypto in that kind of a light. She did go on to talk about the transformative natures, but it was quite a long clip, so we really cut it there, just getting the kind of meat of it, I think, in. She does go on to talk about the kind of innovations that DLT brings, certainly to the traditional markets and how it's transforming things. And again, despite everything going on with markets, and of course we watch the macro, watch the micro, we look at crypto in relation to these markets. You know, it's very interesting actually that crypto's been it's been doing quite well actually against the S&P more recently, and showing a little bit more strength than the likes of the S&P, certainly with this macro headwind. Has that got something to do with where crypto is, perhaps, you know, in relation to it being on the cusp of transforming the world? I mean, it is there, and then you are going to have a massive boom out of it. And certainly, I think one thing that's massively holding out is regulations. But we do have to contend with the broader headwinds that are at play. And Jerome Powell's speech, okay, it might not have moved markets drastically, but it's set in motion higher up the food chain certain things that have adjusted that are now causing larger headwinds than perhaps we would like. And we've spoken about just how central the debt markets are to everything. Debt is the very cornerstone of finance. You know, money itself is a double-edged sword. You have the asset, which is the money, and then you have the debt that backs it. And right now we've got this very interesting predicament that nobody wants the debt, and it continues to fall. And typically the bar of last resort has been the Federal Reserve, and they are forecasting with the last meeting that they're not going to do that really anytime soon. You know, they're not going to go back to QE anytime soon. So you're seeing a continuation to the downside in debt. The historical correlation has been equities up along with debt because it's been a quantitative easing environment. And actually real estate, you know, we look at a broad variety of things like real estate. Real estate has also been hit very hard on what Jerome Powell had to say and the sort of forecast that came out of it. And that is all downside headwind for the markets broadly. You know, generally these are the big markets that if they're going down, your other markets are going to go down, or that's going to be the kind of direction of them. And this week we've got quite a bit of data coming out. Guys, please do come and give me a follow over on Twitter. We will keep you informed with the week's data as we see it. We've got earnings coming out. We've got trading updates. We've got dividends. And of course, Friday's the big one for me, and that's with US PCE, which is the preferred Federal Reserve measure for tracking inflation. And again, the markets have really been stalling out with inflation on the rise. And it's really caused quite a bit of a stir up, if you, or it's caused a negative headwind. We've called Bitcoin a tired swimmer. It's a swimmer, and the macro is really the tide. And we've also called it a paperback in the wind being the macro. And we still think that's applicable. Certainly at a time where you've got very, very low interest for Bitcoin, extremely low interest. You know, this is in regards to BTC discussion rate. You can also see in terms of historic volatility. I don't know why we've got this chart up. You know, it's a very lackluster time period for Bitcoin. A warning on historic volatility. You know, one of our altcoins was up 50+% today. Very good example of what happens when historic volatility daily doesn't reflect it properly. Is at a low. It can be quite bullish historic volatility lows. And Bitcoin is there today. So in terms of the short term, we don't really have that much to give you, because ultimately we're kind of in a bit of a no man's land. You know, it does look, and with the turn of September, everyone gets back to work. So often markets will take a direction. September hasn't been as brutal. It hasn't been as wrecktember. You know, there are still 5 days to account for. And then we go into October, November, which are historically quite bullish months. So we'll see what they bring. For us in the short term, we don't really have too much to say other than let's see what happens. Our preferred scenario for Bitcoin is similar to what happened. We'd like to see perhaps something like that, marginally lower lows, thrashing them out, buyers coming in, setting you into October, November to take out this 30 sort of K level. We're in a similar position, I think, that we were here when we said we were uncertain you're going to get a move, but we're not sure what direction today. Bitcoin's got to show us the strength. We also need to be careful that we don't set up for something like this, which would give you a projected target of roundabout down here. There's a lot we're looking at, but we're also paying a lot of attention right now, which I think you need to, because Bitcoin is that paper bag in the wind to what's going on in the macro. And Jerome Powell's speech, it's no coincidence that TLT started to do this debt and real estate, or metrics as you can weigh real estate up on. And then, of course, the stock market is doing this. This is quite a gap down. So Jerome Powell's speech, I think, was a lot more, what's the right word here? It was a lot more telling than I think people, or it was a lot more significant than I think people gave it thought to. And that's compounded by, of course, inflation and everything in between. And you're seeing a lot of issues, of course, popping up as a result of the tighter financial conditions. We don't think it's enough issues to cause a 2008 yet. We think that's still to come. And we've got a lot of data that sort of we have backing us on that theory in regards to the laggard effects of rates. We don't think you're going to be feeling the full impact of these rates, a year well into the sort of the end of 2024. So we'll see. Short term, we're uncertain. Mid to longer term, we ultimately think that for Bitcoin, the bull market started. Even if it corrects deeper, we think you're going to set up into something like this. And you've got a far bigger wave ahead. I wouldn't be surprised if it tops out here. And we actually think equities are going high. We've got higher targets for the S&P. It could be on an AI narrative. We're not sure. We've got technical targets for that. And we think gold is going high. We think you're going to have actually quite a good risk period ahead of you into a crash. We think you are very much in a similar scenario. And we'll just show you this quickly before we wrap things up. We've spoken about a hell of a lot of information to cram into one video, but there's a lot that we pay attention to. And if you want more in-depth guides on these, please do consider becoming a Patreon. We think you're kind of here, right? And actually, we can put on rates that will paint us a pretty similar story. Rates go up, rates go sideways. You're going to have a good period in the markets. And then you're going to get that laggard effect coming in. Something like this is going to take place. But generally, we think you've got this sort of a time period ahead of you. And actually, if you look historically at every time they've upped interest rates, the market has always closed higher from them upping interest rates from when they started to when they finished. The market's always closed higher by the time they finished than when they started, which throws out most people's narratives, which I don't know where they get that from because the facts simply don't reflect it. And also, pauses historically have meant that sideways period of rates, markets have gone on to new all-time highs during that context, and we think that's going to happen, and we think that aligns with the laggard effect that we think will kick in. And we think, just like we've said for this entire year, the demand destructive event isn't coming. We're bullish, and look at what the equity market's done. Look at what Bitcoin's done. Yes, altcoins are in a bit of a kind of sorting themselves out phase, but generally, we don't believe we're, our sort of getting relatively bullish again at the start of the year call was a particularly negative one. So on that note, guys, I'm going to love and leave you. We've crammed in a lot of information into one market update. As always, that's what these market updates are here to do. Hopefully you've enjoyed the content. If you have a like, it's appreciated. So as a comment, and I'll catch you all in the next one. Thanks for watching, guys. See you in the next.